Hello, this is Brian Shannon from Alpha Trends Blogspot. What we're going to do today is take a look at everyone's favorite market leaders on the NASDAQ. Last Tuesday, the stock closed at an all-time high, and then the next morning I said that basically have a plan in mind for when you're going to exit, because these stocks can sell off very rapidly, and when they do, it can hurt pretty bad, so know exactly when you're going to get out and bank some of those profits. Now the stock had 3 very rough days, dropping about $25–30 or so, and here it is coming down now to a potential level where it might find some support. Now the key words are potential and might, because right now the short-term trend on the 10-minute time frame we're looking at here is clearly lower. Don't fall for these little short-term rallies. If you're looking to purchase shares of Apple, first of all, looking at this stock, you're very late to it. It's had a tremendous run. Doesn't mean it can't continue to move higher, but don't get caught up in the bullish environment thinking that the company can't do anything wrong. Very similar to the way people were thinking about Qualcomm in 1999 and 2000. Back to Apple, though, Apple right now has had this tremendous run, and realistically, if you just look at the Fibonacci, which is a retracement tool, and say from this low right here last summer to the current highs, a 1/3 retracement, only giving back 1/3 of those gains, would bring it down towards 140. A 50% would bring it down towards 120, and a 2/3 retracement would bring it back to 100. Now a lot of people are rolling their eyes thinking that would never happen to Apple, because Apple's a great company and they have all these wonderful products, but that's the way people always think when stocks are in a decline. Listen to the message of the market. The market is saying that, hey, basically we've got some big institutions clearing out of the stock, taking some profits. It doesn't mean that I think the rally's over. These stocks can recover very quickly in here, but there is still a lot of danger, in particular to newer buyers. If you're in this stock and you have a profit, well then, maybe you take a look at the August lows and look at the retracement levels there, because in that case, a 2/3 retracement would bring it down to about 143. A 50% retracement would bring it down to about 153, and a third retracement would bring it down right near that 50-day moving average at about 161. Now maybe that 161 is an area where the stock starts to stabilize, and if it does start to stabilize, then that's your cue to start looking at shorter term time frames to look for evidence that the buyers may be taking back some control. Right now the short-term trend says the sellers are in control here, and since their last earnings report, anyone that's purchased this stock basically is losing money. So keep that in mind and just learn to look objectively at these stocks. Let's take a look now at Baidu. Here's a stock that's, again, had a tremendous rally, just fantastic, going from $100 a share up to, what is this, 430 or so during the past week. This week it had what's known as an outside week down, meaning that it closed lower than last week, and this week's high was higher than last week, and the low was lower than last week. So it was trading outside the range of last week, or engulfed it. Now looking at a daily time frame, you can see the 50-day moving average right down at about $310 a share. Again, this stock has just come from 430. It's not down too much. There's no such thing as down too much as long as someone else is out there panicking and selling the stock. Wait for the stock to show signs of stability before you consider purchasing it. Right now there are no such signs of stability, so maybe down near that 300, 310 level it starts to stabilize, and then there's a good purchase price, but right now there's no evidence that this selling is done. You can always look at potential levels, and that's all they are, is potential levels of support. That 50-day moving average is an area where sellers will potentially say enough's enough, I'm going to stop selling, and buyers start to come in off the sidelines and say, well, the 50-day moving average typically acts as support, therefore I'll put a bid in, and that starts to change the imbalance of supply and demand. So we start to see a little bit of stability in there, and then maybe a rally can ensue. If we take Fibonacci off the August lows on here, You can see a 50% retracement brings it close to that 300 level. So I think that, a lot of times when you get a round number like 300 and you've got the 50-day moving average in there at 310, don't stick your bid in at 310. A lot of times they'll overshoot that obvious level and continue lower, frustrate those initial buyers, and wait instead for the evidence to reveal itself that the buyers are taking control. And once again, on the 10-minute time frame, there is no such evidence quite yet. Now let's take a look at Research in Motion, another stock that up until this week has been considered bulletproof. And again, it's still in a fantastic uptrend. I'm not calling tops. I don't know whether it's going to be a top or not, but this is a scary sell-off to a lot of people. And you would expect maybe some support in this level where we had support after this most recent gap. It gapped up, ran that level, acted as support. So maybe that's going to be support again, also near that rising 50-day moving average. If we take a look at Fibonacci off the August lows in Research in Motion, then you can see that 50% would bring it down to about par. So again, short term, no evidence that the buyers are regaining control. This is a 10-minute time frame. Here's a 30-minute time frame. It ran up very quickly, and now it's falling very rapidly. Don't try and go in there and purchase the stock and be a hero. Google is the last one we're going to look at, and Google's had again a fantastic rally. Not an unusual rally for this stock. It's got a history of making these huge runs and then consolidating, but clearly buying up here at $745 a share. Someone was late to the party. They were buying emotionally. Most likely a lot of shorts got squeezed out of their positions in there. But look at how nicely the stock had held the rising 10-day moving average. Today, or yesterday, on Thursday, it touched on that 20-day moving average. Friday, it collapsed through that level, losing another, close to 30 points. Now, there's the potential that the 50-day moving average can get hit here. And again, you might be rolling your eyes thinking, well, that's another $50. There's no way Google's going to go down another $50. These things happen, it's the market, and when fear grips a stock and people start to rush in to lock in those huge profits that they have accumulated, they'll just go in and say, get me out before the next guy. There is no women and children first. It's, to the lifeboats. It's knock everyone over, me first, hit the bids. I don't care. I want out of this thing. Maybe I'll reestablish, if I sell it down to 650 and other people keep selling, maybe I'll be really reestablished near that 50% retracement level where it has shown some support and where we might meet that 50-day moving average advancing near about 610 or so. But right now in the short-term trend, you can see that it attempted a little bit of a rally intraday on Friday, but it completely failed. If you're day trading the stock, I'd suggest you look at 1-minute charts, maybe even on a stock like Google, you look at tick charts and keep an eye on the daily VWAP in there. But it doesn't look like the selling is done for these market leaders. And taking a look at that, how they're affecting the NASDAQ 100, the NASDAQ 100 doesn't look like it's done going down quite yet either. It's a scary decline so far. But if you've been listening to the message of the market, which is lower highs and lower lows, hopefully you're out of these big positions, taking profits, and waiting for a clearer place to enter. Right now, we don't have any signs of that, so just be careful with these stocks and don't fall in love with the concept of what a great company these companies are, or how good Research in Motion's deal in China is going to be. Those things will play out in the longer term, but short term, it's about protecting your capital, and being involved in these stocks, in particular for the newer purchases, is exposing yourself to a lot of risk.